Moments to go until the close, 6 minutes away, and the Dow is losing air very quickly, down about 353 points at the moment. A lot of troubles with the bond insurers, not to mention the financials. Tough day on Wall Street.
You know, a lot of downgrading going on and suspicion that more will come as a lot of different financials are finding out that their financial records are not as well kept as they thought. Sallie Mae, of course, they're the ones that back up a lot of those student loans. They have been downgraded by S&P to just one step above junk bond status. Their stock, it's getting hit like most stock. It's down about 4.8, about 5% today. Most of the stocks are down today on a day when the stock's been hit all across the board. But again, these downgrades of financial institutions are hurting the market bad.
Yeah, you know, Fitch may cut a CIFG's AAA insurer financial strength rating. Of course, AMBAC and MBIA have been really on the hot seat. And now Warren Buffett telling Fox Business, I'm not helping them. I've got my own bond assurance company that's going to do just fine in this atmosphere, which is a very tough one. So let's throw it out to our Fox panel as the Dow is down 357 points. Tobin, what is at work here?
Well, you know, it was we talked about since basically January. We're in a bear market, and you have to change your perspective. We talked about the idea that you sell into these real sharp V-shaped rallies, just like we had, you know, basically over the last 10 days. That's when you lighten up. You expect to come right to the top of the, technical support. When the fundamentals are cloudy, you got to go on the technicals. The technicals, right when we got to 12,800, boy, everything ran out of steam, and we've jumped right back. Again, you expect in a bear market to have sharp up rallies and sort of slow and low and low and lower until we get sold out. We're not near that yet. You know, it feels great to be in cash. We're going to be buying. The world's not coming to an end, but the world is certainly going to need to price in more problems in the financial world and in earnings than just we are now.
But, Charles, it's important to look at the numbers. Obviously, technicals are important, but specifics of what is happening with companies. What Liz found out today about a lot of these bond insurers and about how their status may be lowered. We just found out that Sallie Mae has lost a grading. One of its rating has gone down to just above junk bond status. This is Sallie Mae.
Right.
I mean, these specifics are hurting the market right now as well.
Well, they're definitely not helping. And, of course, one of the things that helped last week was the tough talk from AMBAC saying, you know what, we're going to keep our rating. And they seemed pretty confident last week. That stock made a miraculous rebound. You know, last Monday I recommended IndyMac. We sold it on Tuesday because the move, it was just outrageous. It went up 40% in 2 days. So, to Tobin's point, some people are trying to buy the bottoms and trade the market, but there's not a lot of money committed because there's so many unanswered questions out there.
Peter Schiff, gold, your favorite, is down about $17 today. But as you look at the overall market and try to explain to the average investor, the average viewer who might not really understand what's at work here, what to do in a time like this, aside from your usual buy gold, etc.
Well, I mean, you got to sell. The market's going lower, and
Do you
gold
sell
is down
into
half.
a fall like this, though?
Yeah, well, it's going to be lower. I mean, it would have been better to sell yesterday, but there's so many problems coming for this economy. Look, let me get back to this thing on these credit cards. People don't appreciate this, but the problem was subprime. The reason the thing blew up was because they assumed very low default rates, and as long as the defaults were low, everything was fine. The minute the defaults were higher than their computer model suggested, it blew up. That's how the credit card industry works. They assume a certain default rate. They are way low on that. Defaults are going to be much bigger than they imagine, and the whole industry is going to blow up. And the economy is a mess, and people have to understand that and understand that it's not just stocks going down. It's the dollar going down. It's up today, but it's going to go down a lot over time. And it's not just selling stocks. It's selling dollars. There is no safety in a money market account or a government bond. People need to look abroad. They need to buy gold. They need to buy foreign currencies. I like the Swiss franc. I like the Singapore dollar. You can buy foreign markets, but you got to get out.
Go ahead, Gary.
Peter, I think it's wrong of you on national TV to say that money markets are not safe as a generalization.
Because they're dollars.
Because, Pete, you're going to scare you're going to scare the living heck out of people here. Most money markets are. Let me finish, Peter. Most money markets are safe, but you should just tell individuals to check for themselves.
No, look, I'm talking about the safety of the purchasing power. Inflation is rising.
Peter, hold on. Gary has the floor.
Look, what we have going on here is a market that is now reacting to recessionary numbers, a move down. I just want to make sure every investor knows we've been through this before. Bear markets happen.
Like this one.
Economies. Oh, geez. Dude, take a Valium for a change.
No,
anyway, and we are going to get through this.
The power drink to
look, we're going to get through this. It's just got to run its course for a while. I have no idea what price or when, but I just want to finish up because I wasn't on yesterday. Eli Manning for president.
Oh my gosh!
I don't know what else to say. It's a great week for the call bombs.
Indeed, it was a superb game. But you know, Charles, you mentioned that you made a call. A stock went up 40%, and then you sold it right away because you said this is really dramatic. What is behind you when you do these types of things as we get about 20 seconds away from the closing bell?
I base everything on fundamentals, and then when they get too ugly, you know, sometimes we just kind of roll the dice, which we did last week. With that and home builders, worked out very well. But Tobin's point, we have been in a lot of cash recently. I'm excited about the market for this.
Well, you mentioned